Hello and welcome to our market alert video for today, which is Friday, April 8th, 2022. Thank you for watching. This week we got the minutes from the Federal Reserve, and for those of you who are not familiar with what that means is that the Federal Reserve has their meeting. They decide on what they're going to do with interest rates. They have their press conference where they announce to the world what they're thinking. But then after that, they released the minutes of the meeting that they had so everybody can read and see what the members of the committee of the Reserve Board said, how much consensus they have and who felt that they should do what. And then everybody parses all the words and tries to read through the tea leaves and figure out what interest rates are going to do. Well, basically, based on the minutes, what it appears is that the Federal Reserve is now saying that they probably are going to raise interest rates 0.5%, which is called 50 basis points, over the next 3 meetings. And then after that, 25 basis points, the 2 meetings after that. Well, that's an increase over what they've been saying. So basically, it means that they're seeing inflation a little worse than what they had first thought. Surprise. And then it also says that therefore they're going to be more aggressive. And they actually said in so many words in their statement that they will be as aggressive as it takes to tame the inflation monster. So the market took it in stride. It appears that investors kind of already thought that was going to be the case, so it wasn't a big deal. There wasn't a big upheaval. However, it is a change from what they said before. And as we've chronicled in our previous videos, the concern going forward is that if the Federal Reserve raises interest rates too much to fight inflation, or if they're forced to raise inflation so much, they could cause a recession, and a bad one at that. As we saw back in the early 80s when Paul Volcker was a Federal Reserve chairman, that's exactly what happened. Volcker raised interest rates so much. Many of you are old enough to remember 16% mortgages, and he raised interest rates so much that he essentially choked off the economy. There was a terrible recession, a terrible bear market that came with that. And that was all because slaying the inflation monster is the number one job. One of the members of the board said that they have a dual mandate. One is to control inflation, and the other one is to have full employment. However, what she said is that you can't have full employment if you have high inflation. So inflation's first and employment's later. So they will sacrifice employment in the name of fighting off inflation, because inflation's first. If you tame inflation, you have jobs. So that's a pretty interesting way of looking at it, but makes sense. So what does that all mean to us? Well, if they overshoot, or if they are forced into it because inflation is stickier than they were anticipating, we could be seeing a recession and a bear market that comes with that. On the other hand, if they don't do enough, if they don't tame inflation, what then could happen is we could have stagflation. And as we've talked about in the past, what stagflation is when the economy is slowing down, but inflation is still high or rising. So you have a stagnating economy and a rising inflation. You get both of those, and it feeds on itself. Think about how that would work. And so as it feeds on itself, inflation causes the prices, the economy gets weaker, inflation heats up, and it feeds on itself. That is a very, very bad situation. When it's happened to other countries, it has essentially driven the economy into the dirt. So I have no doubt the Federal Reserve will do whatever it takes to kill inflation and not allow stagflation. Now, the other option, the other potential outcome is that they thread the needle. And, there's a lot of talk now about the soft landing. Can the Fed generate or engineer a soft landing? Well, what we've seen so far is that the Federal Reserve has been behind the curve throughout this whole situation. They thought that inflation was going to be transitory. They said, we're not going to do anything. We're going to let inflation run because it's more important to get the economy going and all of that. Well, guess what? Inflation is running. And so they don't have a good track record with this whole thing. So what do you think? Don't look at me. I don't know. I don't have a crystal ball. I don't know if they're going to thread the needle. I certainly don't think we're going to have stagflation. The Fed's not going to allow for that. So we're either going to thread the needle and have that soft landing, or we might have a recession and a bear market that goes with it. Which one of those will happen? Time will tell. So what do you do about it? Well, in our view, you should have a strategy. First of all, we believe we have an investment principle, which is number 6, which says do not take more risk than is necessary to accomplish your financial goals. So the first thing that we would suggest, and talk to your financial advisors first, but would be to make sure you're not taking too much risk, that you're only taking as much risk as is appropriate for you. Secondly, we believe you should have a strategy to sell and get out and protect yourself in the event that we have a big bad bear, and sit on the sidelines and wait the storm out. Our strategy is called Invest and Protect. You can find that on our website. It's rpoa.com. We have articles and videos and podcasts about that you can listen to, watch, or read, whichever you prefer, or all of the above. So that's what the future, in our view, looks like. And we hope you are well. We hope you have peace of mind. Remember always, our goal is for you to enjoy your second childhood without parental supervision. We want you to go play and have fun and enjoy. We don't want you to worry about all this boring financial stuff. We want your money to last as long as you do, and we want you to have peace of mind. So thank you for watching this video, and we'll talk soon.